Hey everyone, welcome back to Learn Crypto. Today we're diving into market sentiment in the crypto world. By the end of this video, you'll understand basic investor emotions and attitudes and how they can influence crypto prices, and also how you can use this knowledge to make better trading decisions. Our goal at Learn Crypto is to provide you with the best financial education in crypto, empowering you to make informed and confident investment choices, all for free. So don't forget to hit that subscribe button and follow our socials. It helps a lot more than you think. Let's get started. First things first, what exactly is market sentiment? In simple terms, market sentiment refers to the overall attitude of investors towards a particular market or asset. So essentially, it's the feeling or the tone of the market as reflected by the price movements and trading activity of the assets. So for instance, if we have positive market sentiment, you'll notice price moving upwards. And if we have negative market sentiment, you'll notice price moving downwards. Why should you care about market sentiment? Well, simply put, because of price movements. Market sentiment can influence price even more than fundamental factors, because if more investors believe that price will go up, they will buy. And if they believe that price will go down, then they will sell. And this basically comes down to your mentality. If as a human you think maybe my asset's price is a little bit overinflated and maybe I should take profits, you as a human will sell at that point. But if there's thousands or even millions of people thinking the same thing, well then this influences price in a much, much bigger scale. It's kind of like a domino effect. Let's take Bitcoin for example. So back in March when we had our all-time high, we kind of had a lot of sideways movement and there was a lot of fear and uncertainty, especially over here when we seen this market drop. But our investor sentiment, it clearly changed when Trump won, so this is that day, and ever since then our sentiment has shifted to positive. And we've been able to break through this long-term resistance we've been having for a period of 1, 2, 3, 4, 5, 6, 7, 8, 9 months. So now let's talk about buying and selling pressure and how it relates to market sentiment. So buying pressure occurs when there's more buyers than sellers, and selling pressure occurs when there's more sellers than buyers. So these influence our market sentiment because when there are more buying investors than selling ones in a market, this indicates a positive sentiment, while the increased selling pressure indicates negative market sentiment. You'll see buying pressure in action when there's positive news, such as a major company investing in a cryptocurrency or favorable regulatory announcement. Conversely, bad news, such as data breach, security breach, or something like a legal action by the SEC, this will affect the market sentiment negatively, leading to more investors looking to sell rather than to buy, and therefore increasing our selling pressure. Understanding buying and selling pressures helps you interpret market sentiment. When you see a lot of buying pressure, it indicates the sentiment is bullish. When you see a lot of selling pressure, it indicates the sentiment is bearish. So how can you gauge market sentiment? Well, here's a few key indicators to keep an eye on. First of all, social media mentions. Second, the amount of trading. Third, the fear and greed index. And finally, market news and events. So let's break this down. Social media mentions, so platforms like Twitter, Reddit, and Telegram, they can give you a sense of the public mood. Are people really talking about this coin positively or negatively, or are they not even talking about it at all? So there's tools such as Lunar Crush, they can help you track this. So you can go on Lunar Crush and look at the social media mentions of your favorite coin. Second, trading volume. So high amounts of trading volume can typically indicate strong sentiment, and this can be either positive or negative. So if we have price pushing up with volume also increasing, this is extremely bullish. But if we have price pushing down and volume increasing as it pushes down, this is extremely bearish. And obviously, if the volume is dropping as price goes up, this indicates a local top, while the volume dropping, while the price crashes, this indicates a local bottom. So this is the Crypto Fear and Greed Index. This is a popular tool that aggregates various data points to measure the overall sentiment. Extreme fear can be a buying opportunity, while extreme greed might be a sign that the market is due for a correction. So right now we are in extreme greed levels, which means we might see an upcoming correction. Finally, market news and events influence market sentiment a lot, especially in crypto. You have to stay updated with the latest news, partnerships, hacks, regulatory news. All of these things can affect sentiment. So think of it like this. There's two types of news. There is crypto news, which is focuses just on the coin you're looking at, and then there are economic or overall news. So both of these can affect crypto's prices. So this will be more towards one crypto, while this will be the entire market. So if you're looking at, let's say, the Fed interest rate cut, that's something that'll affect the entire market. But Uniswap getting sued by the SEC is only applicable to Uniswap. So now that you know how to gauge market sentiment, here's some practical tips on how to use it in your trading strategy. So for the first tip, while sentiment is important, it shouldn't be the only factor you consider. Use it in conjunction with other analysis methods, especially technical analysis. Look at chart patterns and technical indicators to confirm what the sentiment is telling you. Second, you should continuously stay informed. Monitor the markets and update your sentiment analysis as much as possible. The crypto market is highly dynamic, and even the smallest bit of news or uncertainty can greatly affect our prices. Finally, you should always be wary of hype and rumors. Not all positive sentiment is justified. Sometimes coins get pumped based on hype rather than real value. This is where you need to do your own research. Additionally, not all news is confirmed. News can be just a rumor, and this rumor can directly affect sentiment. So it's important to make sure that you are aware of this, because rumors are not always confirmed. And if there's a rumor building up that gets denied, well, that totally affects the sentiment. So now I'm going to show you guys an example of how we can combine our technical and market sentiment analysis. So we noticed that when the markets wanted to push above the all-time highs and break through, we would always push above 66 RSI. Now, sentiment around this time was that we will be bullish, 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 but our technical analysis didn't really line up with the sentiment. For example, when we made our all-time high, we were above 66 RSI right here, but then when we went again, we denied it, and again, we denied it, and again, we denied it, and then finally, in October, days leading up to the election, we saw our first breakthroughs. So we went above 66 RSI not once, but twice. So this kind of indicated a shift in sentiment, and we saw this through our technical analysis. And only after we saw this did I become bullish. And from then on, I had been calling for a market top to come soon and a new all-time high to follow. If you found this video helpful, don't forget to give it a thumbs up and subscribe for more crypto insights. Hit the notification bell so you never miss an update. And don't forget to check out our previous video on understanding crypto charts for more valuable insight. Join our Discord server for free daily market updates and connect with other crypto enthusiasts. Thanks for watching and happy trading.